Welcome to today's edition of Toggle's Daily Video Insights. As you know, the most exciting thing that happened to us over the last couple of days is the release of the Toggle mobile app. So check us out, look for Toggle AI in the App Store, or otherwise you can also get the link to download it in the Daily Brief, which by now should be in your mailbox already, or check us out on toggle.global, where again you'll be able to download the app directly. My name is Jan. I'm the CEO and co-founder of Toggle, and as usual, we're going to go through one of the insights today just to give you a sense for how you might be able to use Toggle in your daily investment process. If you like these insights, you can also subscribe to our YouTube channel and you'll receive a steady stream of them. We do them every market trading day. Today, the focus is going to be on Molson Coors, a company that is probably very familiar to a lot of you. And what Toggle is noticing is that actually the valuation indicators, PE and forward PE in particular, have now reached levels where on 13 similar occasions in the past when the stock has reached this level, it was actually a really good moment to buy because it subsequently rallied over 14% in the subsequent 3 months. In other words, at least half the time the stock rallied that much or more. So it's really quite a compelling risk reward. The entry point here is at 44.01, and if the historical paradigm stays a good guide to what is going to happen next, you could expect a rally somewhere to 50.45. Alternatively, the stop loss level is around 40.79 because below the red line, as you already know, you've departed too far away from the confidence interval, and so the odds of the paradigm still holding have been substantially reduced. Now, always good to check why it might move because you're able to see historical periods. When have we last seen these periods of very low valuation? As you can see here, it happened quite a few times. We had it in 2012, then also in 2011, then of course in the financial crisis, and then even back after the dot-com bubble burst. You again hit this level, which subsequently, again, as you can see visually, was usually really quite a compelling entry point for a bounce off to higher valuations. Looking at the back test, again, this is the bit that's worth taking a look just to see what the subsequent returns were on those 13 occasions, and you can see that it ranged anywhere from 5% all the way to 15% at the top over the subsequent period. And the distribution is quite meaningfully shifted to the right. So the typical return over any 3-month period for Molson Coors would be this, but the skew here to the right shows that actually the odds of higher returns are meaningfully higher when you have valuation in these levels. Now, click here on the overview to check also what the overall picture looks like for the stock. And as you can see, actually, even late last year, Toggle already highlighted some positive price pressures that ultimately came to be true for this stock. And after this recent correction, it's basically highlighting, look, the valuations are once again compelling. So this is potentially a good point to get back into this position yet again. We'll end it here for TAP today in the daily brief. If you have one, it should be in your mailbox already. We also discuss the importance of the sell-off in US Treasuries and the immense purchases of US equities by foreigners and what that might mean for the market going forward. If you don't have the daily brief, please sign up on our website on toggle.global. Thanks again. We'll see you tomorrow.